Into Chartbusters here on CNBC-TV18. Well, Rolex Rings, that's the stock in the focus. Remember the stock was, in focus just a couple of sessions ago because there was a large trade that took place where the PE firm, Revendell, sold their 12.5% stake in the company for around 580 crores odd. Remember, this was a bit of an overhang. So once that's out of the way, the street seems to be a little bit more positive on the stock, and it's seen a bit of a bounce from the levels that the block took place. But let's focus on business and the way ahead. We're joined by Mr. Hiren Doshi, the CFO at Rolex Rings. Hi, Mr. Doshi. Good morning. This is Nigel on this side. Good to finally speak to you, live on television. Well, exports are close to around 60% of your business. Now, I wanted to understand how much comes in from Europe, and with regard to this Europe exposure, could you tell us if you've witnessed any kind of slowdown? There's a power crisis out there. The currency as well has moved unfavorably. Will you get hit? Go ahead.
Good morning, Nigel, and again, good to see you. As far as our overseas revenue is concerned, we have out of our 60% overseas revenue, in that 40% that comes from the European market and remaining from majorly from the US market. Touchwood, the euro has a bit lower in the last fortnight, and that has a marginal impact on our this thing. And down the line, we expect some kind of marginal decrease from European market from November onwards. But at the same time, one of our customer base at USA, they have added a couple of new plants of their European facilities. So, our momentum, or rather our revenue built up, would be more or less same, and we expect not to have any kind of negative impact of this currency downfall, as well as overall the recession what we are expecting from the European market.
A few questions. What proportion of your exports is from the Europe?
It is overall, it is somewhere about 25% of my overall revenue. That is from European market.
Okay, of your overall revenue, 25% and 40% of your exports. Take that point. But you did have a fair amount of inventory pile up in the first quarter, and a lot of the revenue would now be coming into the second quarter as well. Can you give us a sense of how the second quarter is panning out for you right now? In the conference call, you did say that 110, 115 crore per month is the kind of run rate that you're clocking in. Is that sustaining right now?
Yeah, that monthly run rate, we are near to that only. It is in ranging of 100 odd crore even in the second quarter, and more or less, the second quarter would be on the same line as quarter one. And in our business, we have generally the second half would be much better than the first half. You can say almost 45% something what there in first half, and 55% of my remaining revenue that comes from the second half. So we expect this quarter would be more or less on the same numbers what we had in Q1, again with the same kind of margin and sustainability. But down the line, we expect a jump in the second half also.
So 1,200 crores for the year with 23% margins. That's something you're aiming at?
We are aspiring to that, yeah.
Okay, all right. Another kicker will come in because that 16 megawatt power plant, the solar power plant, will give in some savings. And you've spoken about this in the past as well. My question to you is, when does it start reflecting for the company? And at optimum levels, just to reconfirm, it'll save around 13, 14 crores, right?
The solar plant, that would be partially, it would be operational somewhere in October of this current fiscal, and the remaining would be operationalized by March 23, and the full next fiscal will be having that benefit. And as you said rightly, the revenue benefit would be in the range of 12 to 14 crore rupees annually.
All right. And what about the excess land that you are planning to liquidate going forward? Can you tell us the size of the land? By when are you looking to liquidate it? What's the kind of money that you're looking to raise through it?
Company is having a non-core asset, a piece of land, which is almost 170 odd acres. And we are in process of, liquidating that thing. We are in search of good buyer, and maybe in the recent future, we expect something if the real estate market, is having some kind of better upward. then definitely we expect to get it realized maybe in next fiscal.
Where is it, this 170 acres land?
It is nearby to our factory, only almost say 25 kilometers away from our factory on the national highway.
Roughly, can you tell us what the going rate out there is of 1 acre?
It is ranging, somewhere about 50 lakhs to
50 lakhs.
80 lakhs or something.
So approximately at least, you'll get at least 85 to 100 crores at least should come in. That is in FY24.
What we expect.
Okay, all right. We've got that then. Let's talk about your EV business. That's where the kicker comes in, because that will be the way ahead. I think last year you were around 7% odd in terms of contribution, and you were looking at taking it to mid-teens, I think. So for this year, how much will it contribute? And also, when we did a show last time around, people are asking, Tesla is your client? Are they your client?
See, we are not directly supplying to them.
Yeah.
And
but indirectly, sir?
Yeah, indirectly, yeah, definitely. And this year we are planning to have revenue overall, say 10 to 12% something from EV segment. And a few more customers are adding a couple of components required for EV. And we are very much geared up to, produce EV components also, as our facility is having that kind of capability.
Right.
So we expect 10 to 12% revenue from EV in this current fiscal, and maybe something more in the next one.
Okay, 10 to 12%. I just wanted to understand about your EV business itself, the potential of that. How much are you supplying per EV in terms of a contribution, and how much is the headroom? Because you said a lot of clients are also asking for more contribution coming in from you. So just wanted to understand on a per car basis, what is the quantum that you apply, supply already, and what is the potential here?
See, as I told you that we are tier 1 supplier or something like that. We are not directly supplying to EV manufacturers. So the components what we are supplying, further it will be processed, assembled by our customers, and by then it will go to the EV car. So it would be difficult to tell you the overall, the quantum of amount of EV vehicle or something, but the number of components of, the bearings for which we are supplying bearing ring, and certain wheel hubs, auto components kind of thing. So a good amount, or rather the sizable number of components are required for EV, what we are able to produce. But it's difficult to tell you that how much quantum it would be.
Okay, all right. Mr. Doshi, final question then from my end. This year you're talking about doing around 1,200 crores, margins of around 23%. And you have been sounding optimistic that mid-teens to 20% is the growth number you're looking at. There could be a few challenges on the way, but as you're saying, in Europe, the challenges will be offset by the US client. So for FY25, can you look at those peak levels of around 1,650 crore rupees? Is that gettable? I'm just doing rough math. 1,200 crores, you grow by 15 to 20% for FY24 and then FY25 as well. So 1,650 crores on the cards?
Very much. It would be more than 1,550 crore at the current commodity price level. We expect and we aspire to achieve almost 90% of our capacity. What we have.
Just a correction, sir. I said 1,650 crores. So that's the level, right?
But what we are aspiring is more than 1,550. Again, it depends on the commodity pricing. We are getting some kind of indication of, the downfall in the steel prices also. So that will affect overall my revenue number.
Just a quick follow-up on this. You said incremental businesses this year could get you 200 crores of revenue. From 1,000, you go to 1,200. Your capacity utilization is close to around 63, 65 odd percent. You aspire to take that to about 90 odd percent. And industrially, I mean, you've planned to add around 6-7 further plants of SKF, 2 to 3 added last year. You have Timken as well. How much will industrial contribute to your overall revenue?
See, as I told you that this 250 crore revenue, that what is we expect from the new customer and existing customer adding their new plants in the next 15 to 18 months. At the same time, we are expecting good turnaround in our existing customers and incremental demand. One of our main auto component customer base at USA, they have given certain indication that maybe from December onwards they would be adding 20-25% additional requirement for that.
And this 1,550 to 1,600 crore revenue that you're targeting in FY25, would be at the same margins, or would margins improve because of the mix?
No, definitely it would be having better margin
How much?
compared to the current one. Yeah, we are expecting at least additionally 5 to 10% margin on my current rate.
So your margins are currently around 20 to 23%. It moves to what level? To around 24, 25%?
It would be ranging. It would be ranging 23 to 25% and somewhere in between.
Okay.
It's been good speaking to you, Mr. Doshi. Thanks so much for stopping by. The street has taken note of all you had to say. The PE overhang is out of the way. For the time being, you have a market which is trending with a cut of around 250 points on the Nifty, the mid-cap index as well as in pain, and the stock is up closer around 1% odd. Not coming cheap, but it appears that the company is on the growth path, and that's something that the street likes.